Okay, welcome back. We're just hitting market pre-open in 3 minutes or so. Chandan Tapari, a derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, good to have you with us here. Thank you very much. What's the lay of the land from a futures and options perspective, and what would you advise?
Yeah, good morning, Prasant. So, overall net to net this series, the close positive, but in the last hour of the session, we witnessed some volatility. India VIX spiked near to 19.5. Market again got stuck in a range. But the important part is even after all the volatility, the basing formation is clearly visible and the supports are gradually shifting higher even after the multiple hurdle at higher zone. So because of that, we believe the declines could be bought and selective stock specific action will continue in the Indian markets. So talking about the Nifty as of now, the 17,442 to 17,777 is the trading band, and we require a decisive breakout from this range to commence the next leg of rally. So any kind of position can be held with support of 17,442 above 17,777. We can even aid with the conviction for the next leg of rally towards 18,000 and 18,500. So I'll be playing with these levels for any kind of trading setup in the Nifty index. Similarly, in the Bank Nifty index, we have seen 83% rollover in line. Yesterday, we witnessed call writing at 39,500, and because of that, it was not surpassing. But at the same time, we have multiple support near to 38,500. So 38,500 to 39,500 is the trading band, and we require a decisive hold about 39,500 to commence the rally towards 40,000 and 4100 level. So we need to understand these level 39,500 and 17,777 as a hurdle to commence the next leg of rally. Now looking at the stock specific setup, we have positive view on the CUB, City Union Bank. This stock has seen the 94% rollover, giving a consolidation breakout of last 21 months. So recommending to buy with a stop loss of 182 for upside target towards 201. Second trading idea, that is Crompton Consumer. This stock has given a consolidation breakout from its pattern of cup and handle, which has bullish implication. We have seen rollover near to 68%. Some short covering also triggered. The stock has surpassed its falling channel and giving the fresh leg of uptick. So recommending to buy with a stop loss of 403 for target was 433. Last trading idea, that is buy on McDowell. This has bottomed out and taken support in the lower trading band of the range. So recommending to buy with a stop loss of 795, and here we have a target was 850 levels.
Okay, thanks a lot for that. So those are some ideas. Well, Gurmeet Chadda is back with us. Gurmeet, you have the Reliance AGM that everyone's going to talk about. It's coming up on Monday. And although people are expecting some timelines for the listing of Reliance Jio, the retail business, etc., in all likelihood, nothing of that sort would come out. At least that's what, the talk is. Perhaps they'll talk about the 5G launch, even on the O2C business. But from a stock-specific standpoint, what's your view?
So, Sonia, remain constructive irrespective of the AGM outcome. I think Jio listing is more a question of when and not a question of whether it will happen or not. So I think the value unlocking will happen. I think probably would have happened had the Aramco deal not fallen through, because then all businesses, they would have had strategic partners. But I think eventually will happen. I think also I think there is more, I think the stock did have some been a little subdued, I would say, relatively, is because of this, intervention on the windfall tax. I think as time progresses, even those numbers should be behind, because the government is pretty active on intervening on a very real-time basis this situation which is dependent on oil prices, spot margins on refining, etc. So I think their ARPU pass-through in Jio has been very, very good. So Jio remains good on track. Retail is also focusing well, and most which I like is I think they're trying to do to energy what they did to Jio. So that's one portfolio you need to watch out more for the long run, how they monetize it, how the scale up happens, because there is capex right now there. At some point in time there'll be monetization.
Okay, now Gurmeet, have you tracked this stock Go Fashion? It made a bit of a move last couple of days. Any view here?
No, Anuj, unfortunately, haven't tried.
Okay, no problem on that one. The other one that I want to discuss with you is Adani Ports. That's also showing some decent moves. Views here?
So Anuj, obviously one Adani stock which I like is obviously the other portfolio has been a miss for most of us for various reasons. Is Adani Ports, because to me that's a very, very structural play on economic upcycle. I think they have one of the most state-of-the-art ports and the ability to handle both mid and and heavy containers. The cargo market share eventually, I think, should be about 1/3 in the country. Currently, it's slightly sub 30%. And it has all the growth levers in place. At some point of time, it could also be interested in a container corp, or but I don't want to be speculative here. So that it becomes a more integrated logistics player. And I think logistics is one sector I like. So Adani is one. There is Blue Dart. There's VRL Logistics. I personally think that I think this is one space which is due for a re-rating.
Okay, well, that's one space that's due for a re-rating. Another space that has done exceptionally well and perhaps is getting re-rated as we speak is real estate. So Gurmeet, coming to you in a bit, we have another expert joining us. Real estate stocks have been surging in trade. Several of the companies we spoke to told us about the solid demand they're witnessing and their promising launch pipeline as well. Murtaza Arsiwala, who's the director at Kotak Institutional Equities, joins us now to discuss the sector. Murtaza, good morning and thanks for joining us on CNBC TV18. Yesterday, we were speaking to the management of DLF and they said that the offtake is getting stronger, the launch pipeline is very strong, and across the board, be it affordable or luxury, demand is picking up in a big way. How are you looking at the stock now?
Absolutely. Good morning, Sonia. We've been constructive on the residential real estate space, DLF being no exception. And, completely echo the thoughts of the management. At the start of the quarter, let's say around April, May, this year, there were concerns on what the rising interest rates, etc., do. But I think, come June, as companies started reporting their operational sort of numbers, it was no exception from the preceding quarters where sales momentum continues to be pretty strong. Across the spectrum, what we've also seen, which we've not seen in a large part of the last decade, is price increases. DLF's also benefited greatly, especially in the Gurgaon market, with sort of price increases almost touching double digits. So it's been a solid, consistent performance, over the last, I would say, almost 8 to 10 quarters, where we are seeing consistently better, stronger sort of sales numbers, and that doesn't seem to be sort of losing momentum just yet.
Murtaza, when we look at, it's a larger question, when you look at real estate and where stocks are headed and can you stay invested for a while, does one have to necessarily make a call that this is a cycle which will last for many years to come? Or can one kind of, because this is also a cyclical sector, although the cyclicality starts to play in after many years, right? So it's not short cycle in that sense. How do you think about that?
So there are two parts. When we're looking at the listed space, which is where we are investing, these are mostly the stronger, better, larger, more organized players. One is the cyclicality, which you talked about. The other is the market share gain or the formalization of the sector. Over the last 5-7 years, regulators, government, etc., have all been playing their part in sort of institutionalizing, formalizing the sector a lot more. What is also happening is that the consumer continues to shift, in favor of the stronger, better, more organized developers. So one is, an upcycle that you're playing for. The second is the market share gains that you get with players such as DLF or, amongst the other large sort of listed players. On the cycle specifically, it's hard to call. Having said that, we've seen almost 8 to 10 quarters of consistently improving sales, even at an overall sectoral level. We are back to sort of our previous peaks, which we last saw around 2012, 2013-ish, which essentially tells you, you had a sort of soft real estate cycle almost from 13, 14 all the way into FY 2021, and that's when, ironically, it sort of coincided with the pandemic. But that's when you started seeing some green shoots. And, our initial observation was, is it just a quarter of pent-up demand because you've had a near shutdown of the economy? But it seems to be continuing. The demand seems to be good. Price inflation is there in the system. And in a way, while people talk about interest rates, from the Indian perspective, I think what price increase does is brings back some amount of investor interest, investor demand in the sector. And I don't know how the causality works, whether, it's the price increase which is driving the demand or the demand which is driving the price increase. But whichever way, I mean, the party seems to continue as far as residential real estate goes so far.
Good morning. So let's talk about some names. The Mumbai real estate stocks haven't done too well of late. I mean, they had a big rally, and of late we've seen a bit of a decline in names like Godrej Properties, for example. Do you cover them, and what's your view here and your top picks?
So we do cover Godrej Properties, and yes, that's the exception that we have, to a more constructive or positive stance on the sector. I think Godrej Properties was sort of, the flagship of the real estate sector, and it did fantastically well in terms of pre-sales. It did trade at a big premium because most investors did want to look at it as the way to play the consolidation theme, right? It has a larger brand beyond just the real estate business. What has happened over the last 2 or 3 years is that several other players have played catch up on that, sales numbers. So, while Godrej Properties continues to clock consistent sales numbers, there have been several other players in DLF, in Lodha, in Prestige who sort of played catch up. And really, to my mind, the underperformance is really, readjusting the premium that Godrej Properties enjoyed, because you've got other alternatives which do an equal amount of sales. So I think it's more relative rather than absolute.
Okay, it's more relative rather than absolute. What about some of these, South-based players? They've been doing exceptionally well, Prestige, Soba, etc. You think there is more scope there?
So there is, if you look at their valuations, they're not that demanding per se. And again, when I talk valuations in real estate, it's a bit of a tricky affair because the P&L really reflects the work that was done about 3, 4, 5 years ago. Having said that, they continue to benefit from strong demand in Bangalore, as do other cities in the country. Bangalore is relatively, I would say, a more consolidated market per se, because the formalization probably started a bit earlier in Bangalore. Having said that, I think there is still scope for more. Peak sales in Bangalore were almost 1.5x of where we are today. So there is definitely headroom per se. Each of these players, if I were to pick Prestige in particular, very, very commendable performance, in its debut quarter in Mumbai. One of these smaller projects had sort of launched previously. Project in Mulund got launched in the quarter that went by. At almost about 750 crores of sales. That's a very strong debut performance for Prestige in Mumbai. So, Prestige is the leader in the Bangalore market and is making a big splash in the Mumbai market. So, there are definitely players to look out for. Prestige definitely stacks up high in that pecking order.
Yeah, your price target of fair value is about 19% higher than where Prestige CMP is. Soba, 22% upside according to your where you think prices should be. In Brigade, some 13%. Murtaza, you also track, I think, hotels, right? Lemon Tree, you have coverage. Very briefly, is there... That's another space which people are getting very excited about. But you got a fair value of 74, just implies a 7% upside. Your thinking? Yeah.
So let me put it, in perspective in that sense. The last 2 quarters, I've seen continuous earnings upgrades. Business continues to be showing strong momentum. If I were to look at 1Q23 results, both on occupancy, on room rates, you seem to have left the pandemic behind. For a large part of the last 2 years, the hospitality sector was a rebound trade, a bounce back kind of a trade. You saw the worst of business through the pandemic. I think that's behind us. But what seems to be, what these companies are taking back from the experience of the pandemic is a very strong cost control and a momentum which seems to be building up. In my view, international travel, business travel is still not seen its full sort of blast. That could still lead to improving metrics. So while, the absolute upside remains much lower and the stock's done fantastically well in recent times, I would be watchful of how business performance can surprise me still before I sort of re-evaluate my stance on that company.
Okay, we will leave it at that. Thanks a lot. We're running into the market opening, but pleasure speaking to you. A couple of stocks that we're looking at in pre-opening. Eicher Motors is topping the charts on the downside this morning. Now, I'll tell you why. There is another resignation that has happened. The CFO, Kaliswaran Arunachalam, has resigned from the company, and he was a part of the management team at Royal Enfield. Now, why is this important? Because there have been multiple resignations at Royal Enfield over the past 1.5 years, and that is a bit of a concern for the street. From August 2021, ever since the CEO Vinod Dasari stepped down from Royal Enfield, since then the Chief Commercial Officer Lalit Malik, the Global Head of Marketing Shubhranshu Singh, and the Asia Pacific Head Vimal Sumbli resigned subsequently, and that just raised some concerns about what's happening with the top management team over there. Apart from that, UBS has also downgraded the stock to a neutral, but their primary issue is that the stock has rallied a whole lot, and now perhaps valuations are looking uncomfortable. They've in fact raised their target price to 36.50, but these mass resignations that have taken place in the past 1.5 years is definitely a point of concern for Eicher Motors. But let's also talk about delivery. There's an interesting brokerage report over there. Mangalam is here with more.
That's correct. So Jefferies has initiated coverage on delivery with a target of 775 rupees a share. They have a buy call because they believe that this, like all the others, believe that is a play on the fast-growing e-commerce market in the country, as well as the formalization of the logistics space itself. It is a dominant B2C company, but importantly, remember, just before the IPO, it had invested about $300 million in an acquisition of Spot On, and that would actually increase their business in the B2B space as well, and that is another trigger that they are working on. Importantly, as things improve for the company, as scale comes by, fixed costs should drop to just about 16% of sales by FY26 from 26% that it was in the last year. So that would enable 1,000 basis points jump in their operating performance, and that would mean that their margins improve as well. So these are the factors why Jefferies is positive on delivery.
Mangalam, thanks a lot for that. Let's now focus on the market opening. We should get the opening rates in a bit. Mahindra & Mahindra is the stock which is looking quite good in pre-open. That's the top gainer, up about almost 1.5%. For that, Hero and Tata Motors, other stocks doing well. The Nifty is opening about 100 points higher. 17,628 is what we have. The Bank Nifty is up about 200 points, so looking quite good. And it's the auto names which are leading the charge. Mahindra & Mahindra is up 1.5%. Tata Motors is a bit higher. In fact, the other Tata Group stocks also doing well. Tata Steel is up by about 1.5% as well. Tech Mahindra is doing well. JSW Steel, Infosys. In fact, IT is doing well. Nasdaq was higher overnight. The Nifty holding about 100 points gain for now. In terms of losers, Eicher Motors, the stock that Sonia spoke about, is the only one that stands out, down about 1%. But otherwise, things looking quite good. The Nifty holding firm, 17,637 is what you have. Remember, yesterday's high was somewhere around 17,720 or thereabouts. So that's something that you will have on your radar as the level to watch. But for now, the opening has been quite good, Sonia.
Very good opening, even for the mid-cap. So up almost 260 points right now. Delivery, the stock that, Mangalam was just focusing on, Jefferies has initiated a buy. They have a target price of 775 on delivery. So it's a big upside. I think this whole e-commerce space is something that's doing very well. So just look at that, 4% higher. Crompton Consumer is another one that's up almost 3%. A lot of banks are moving up actually. UCO Bank, IDBI Bank, Bank of Maharashtra. The whole lot is up anywhere between 2 to 3%. And then you have a couple of these Adani Group stocks, Adani Wilmar, etc., that are doing well. The market, by the way, is surging now, so don't lose sight of that. 140 points in the green on the Nifty, back above 17,660. A lot of stocks hitting fresh highs in the capital goods space. So Thermax is yet again at a fresh 52-week high. Yesterday we saw ABB Siemens at fresh highs as well. Talking about 52-week highs, REC Coal India also at fresh 52-week highs. By the way, the other stock that is just surging away right now is Nelco. We told you about that. There's some news flow on Nelco this morning, so just keep an eye out on that stock. I think, okay, 10% higher on Nelco as we speak, and volumes are also piling up there. Eicher Motors is the one on the downside that's reacting to the resignation of the CFO. So Eicher Motors down about 1%, bucking the market trend. But otherwise, very good opening for the market.
Oh, it's absolutely stunning. 135 points. So this is looking solid as they come. Will it stay solid is the question, which we will find out as the day goes by. But just a couple of more names in addition to what Sonia and Anuj mentioned. Crompton is up 3%, 422. Steel Authority is up 2.6%. I'm just kind of listing out stocks with volumes right now. Sale is at about 82. IDBI went up yesterday. It's up another 4% to begin the day. Nelco, of course, we already mentioned, 10%. Time Techno is up 4%. Stocks at about 121. Volumes are still picking up. Tata Coffee is up 2.5%. Delivery, of course, which we just highlighted, is up 2.5%. What else? I mean, I don't want to go down the volume list. RBL, of course, is starting higher, but it started 4% up. It's got, beg your pardon, just about 1.5% on it. Rolex Rings is down 2.5%. It's a relatively newer listing. 1724 on Rolex Rings on volumes, large volumes for this time of the day. You don't usually see it here. There is Tata Elxsi, which starts about 1% down, and Bharti is down about just under 1% as well. What else? Coaltape Patil is down 3%, and I mean, lack of volume. So we'll kind of give it some time and then come back and look at some of these stocks. 17,657 is where the Nifty is at, 135 points higher. Rahul Arora is CEO at Nirmal Bang Institutional Equities. He's joining us right now to take some questions. Rahul, I was reading this blog post by Malden Economics. I don't know if you follow him. His title was simple. I mean, actually, I just read the first para. Markets up some 18% from lows. People are still bearish. It's time to buy. Would you concur with that? Or you think, how are you thinking about markets from here out?
It's an interesting analogy of sorts, Prashant. But I think, the one thing that's probably changed dramatically from about a month and a half back is the return of the FI money. I don't think if we were having this conversation in June, July, people were anticipating that the FI money would come back in such a big way over the last 30 to 45 days. So I think to some extent that's provided some cushion. At the highest point of last week, the Nifty was about 4% from making a new high. It had almost touched 18,000. So I think, Prashant, the good part is that most of the rate hikes by global central banks seem to be behind the system. Obviously, this is going to have a lag on the economic effect of the countries with a lag. And to that extent, I think to some extent, FY24 numbers have been revised on the way down. But I don't see any trigger for the market in a very material way to break out above 18.5, 19,000 on the way up. Conversely, 3 months back when crude was at 125, 130, and there were predictions of 150 and thereon, crude sort of bounced back to 90 to 100. So I think that will provide some downside support, both on the twin deficit as well as the currency. So I think you're probably going to get into a situation now where the range of the market has shifted, and probably for the second half of this calendar year or whatever is left of it, you're probably going to be in a range of maybe 16.5, 17 on the way down to about 18.5, 19 on the way up. But I like the way you summarized it. It's actually a fairly reasonable way to look at the market.
Rahul, hi, good morning. Good to see you in good health. What's your view on metals, Rahul? That's the one where, you're seeing, the price action is indicating that maybe the market wants to give it another shot. There's some bets being taken this morning, for example, on Tata Steel and all the others, sort of metal stocks as well.
Morning, Anuj. Thanks for your wishes. I think, Anuj, there were two aspects to it. One was, of course, the fear of the Chinese economy slowing down and what resultant impact it could have on metal prices globally. But then, of course, China, surprising with rate cuts off late, has actually, sort of changed that view a little bit, that they're looking to spur the economy in whatever way they can. Now, China traditionally, Anuj, has always been a country where they've gone in for excess capacity, more than what they require on any infrastructure project. So I think it's had a dream run. It's had a bit of a time and price correction, but it's not a bad time to look at it, because I think India will also end up being a net consumer in a very material way. I think, Anuj, we're sitting about 20 months away from a general election in India. I do anticipate that government spending will pick up in a fairly material way through infrastructure projects, which will definitely increase the demand for commodity and commodity-related products. So I think the Chinese economy trying to spur up by announcing a rate cut, the fact that you have the midterms coming up in the US, and the fact that India, as a huge importer of commodities, is also probably going to look at a big infrastructure push. I would definitely look at names. Anuj, the interesting part is also some major guys are even announcing capex plans. I mean, look at Hindalco. Novelis has announced a very large capex plan. And when you announce these kind of numbers, you do have some amount of demand visibility. So I think it's not a bad place to be. I would look at being with the market leaders in both ferrous and non-ferrous, because they've had a bit of a time and a price correction.
Okay. Rahul, good morning. The space that has been rallying hard is autos, right? Because of the slew of new launches, so much demand. But another proxy in this is, of course, the auto ancillaries, not just the traditional guys, the forging guys, etc., but other names, whether it's something like an Asahi India, something like a Precall. We just spoke to Uno Minda, who's doing so much work in the EV space. Do you think there is a structural story here? And if yes, what are the stocks to look at?
So, Sonia, if you remember when we spoke right at the onset of the monsoon, it was probably one of our biggest sectoral calls that we had for the year. Obviously, it was more related to two-wheelers and commercial vehicles, and we still retain our positive stance on names like Ashok Leyland, Hero, TVS, and the likes. But on the auto anch side, I agree with you. I think for a lot of these players, the replacement cycle will be kicking in. I think we're fairly sanguine about the demand growth, coupled with the fact that the semiconductor issues that a lot of the OEMs had have been put behind us. If commodity prices don't go through the roof, I think we should be okay in terms of the price hikes being passed on. You spoke about Uno Minda. The point I was making about ferrous and non-ferrous companies to Anuj a little while back, Uno has just announced a capex plan, I think, of about 300-400 crores. So I think this is a statement of confidence. You see a lot of chemical companies also doing it, where they're doing it because you're seeing some amount of demand visibility. You had a very large block on Sona Comstar done in a few days back, albeit at a little bit of a discount, but you had a fairly marquee investor that came into that name. They're doing a lot of good work on the electrical vehicle side as well. You have a Jamna Auto, which is another proxy, since you mentioned a couple of small cap names, which does a lot of parabolic spring works for commercial vehicles like Tata Motors and Ashok Leyland. So no reason why you can't go in there. I think Endurance is another name that you could add to that, Sonia. I think these are 3 or 4 names in the auto anch space where people are doing capacities. They are looking at electric vehicles. There is a replacement cycle coming in, and some of these are catering to CVs and two-wheelers, the particular side of the auto pack that we're confident on. So even though the sectors had a good run, I would still be marginally overweight the autos and auto ancillary sectors even from here.
Rahul, I remember you've been very bullish on the multiplex space, right? Inox, I think, has been a preferred bet. Just talk us through what you think is happening there. I mean, PVR, for example, of course, is going to be one entity now with post the merger, has corrected quite a bit. And there are you can pull at various threads which are responsible for this. But your thoughts, and are these good levels to now get back in?
Interesting observation, Prashant. I think the one thing that is a bit worrying for me, even though I'm structurally very bullish on this space, is that the Hindi cinema content hasn't really picked off. And I think you've had a great amount of content that's coming from the southern part of the country, and they've done really well. But unfortunately, even from mid-level stars to big-level stars, the movies aren't really ticking the boxes right now. So there might be a little bit of short-term pain. And I think to that extent, you've seen a little bit of correction in these names. I think this problem could persist because I don't think there are any major ticket releases lined up, at least till Diwali. So this may actually not be a bad time to start accumulating. You always buy good businesses at bad times. I think, a lot of the content that was probably produced in the pandemic or just before is probably what's got released over the last 6-8 months. So I think the fresh content will probably come through with a bit of a lag. And I think the fact that you've not had any major blockbusters in the Hindi cinema industry that have probably clocked in 400-500 crores, as opposed to the southern industry, which is predominantly single screen. I think 65% of the screens in South India are still single screen, if I'm not mistaken. So to that extent, a little concerned about 1 or 2 quarters. But I think structurally, as you rightly pointed out, this is virtually a monopoly right now. I think, you've had good content come in over the last part of the calendar year and the early part of this. I think the last big one to probably from the international space was Top Gun. But I think this will sort itself out. I don't think valuations are ridiculously expensive right now, even though they're 2 entities. But like I said, good businesses in bad times deserve to be bought. And if you have a longer term horizon, I think content will correct itself. I'd probably start nibbling into these things.
Market, by the way, is surging now, 17,682 on the Nifty. 17,726, remember, was yesterday's high. So almost there now. So it looks like the yesterday decline was purely expiry play, and a lot of stocks doing well. Metals, of course, standing out today. Vedanta, Nalco, SAIL, all these stocks doing well. Rahul, it's a bit of a coincidence that whenever we have you on the show, Westlife hits all-time high. But jokes aside, on this space, because Jubilant clearly has sort of lost flavor with the market participants. Every time it's attempting a rally, that rally sort of fails. But your view overall, and what would be your preferred picks here?
Anuj, I think the thing with Westlife is this is never a company that's operated in double-digit ROEs and ROCs. And I think the good part about this company is that the expansion that they have historically done between 20 to 30 stores is predominantly what their balance sheet allows. I think the thing that's changed for Westlife materially over the last half a decade is obviously delivery, which is up to 35-40% of their business. McCafe, which has, I think, about 10 to 15% higher gross margins than system-wide margins. And just the fact that, the dine-in model has come in through a bit of a vengeance post the opening up. Jubilant had these advantages through the pandemic and even before. Obviously, their store sizes are a lot lesser, are a lot smaller, so the return on capital employed to that effect is higher. But I think the product prices has a very big role to play, Anuj, and the fact that Jubilant predominantly caters to lunch and dinner, and McDonald's gets you in at breakfast and it can take you to post-dinner desserts as well. I think all of these things put together, coupled with McCafe and delivery, I think this is a company that will probably head to 15 to 18% ROEs and ROCs in the next couple of years. I think people are taking that call. There is visibility. I think if you plot the same store sales growth of Westlife, you might be surprised that for a dine-in model, they have done remarkably well, even over a 3-year CAGR, which includes 2 years in the pandemic. So I think a lot of the levers that Jubilant had that McDonald's has taken and built very strongly on, I think Jubilant, Anuj, will probably require a couple of quarters of delivery by the new CEO. Obviously, when Prateek Pota came in, he had that because he rationalized store openings. Jubilant is sitting on the cusp of an announcement that they're going to open 100-150 stores when people are a bit concerned about the economy going into a slowdown. So probably a couple of quarters of delivery from Jubilant could get that going back up and running. Jubilant obviously is a higher FII owned stock. So, when you had the sell-off in May, June, July, at a 47-48% FII holding, it was always going to see more of a brunt than Westlife did. But I think the fact that Westlife is also close to becoming a mid-cap name, Anuj, I think the market cap is about 20-25% away from becoming a 10,000 crore market cap. Once that happens and it enters the mid-cap funds of fund managers, you could potentially see a further re-rating as it gets included into other indices as well. So the pecking order now just between these two would probably be Westlife 1 and Jubilant FoodWorks 2.
Okay, but even Westlife is opening, right? I mean, they're opening, 40 new restaurants in FY23 and 200 restaurants over the next few years. So why is only Jubilant's expansion plan concerning you and Westlife is doing the same?
So I think, Sonia, the reason for that is, even at 40 stores, I don't think Westlife is going to stretch its balance sheet. And B, I think the fact that Jubilant is at about 1,350, 1,400, or maybe even close to 1,450 stores, the penetration of Jubilant is probably going to happen in more in tier 2 and tier 3 cities, where I think the economic impact could probably be felt more from their price point. The advantage that Westlife has is, even though they have only half of India, let's take an example of BKC, right? Maybe some of us from Bombay can understand it. BKC doesn't have a single McDonald's store. And given the connectivity issues that you have inside Bandra complex, I think you could probably have 2 or 3 Westlife stores and they probably all will do well. So I think one is where you are expanding, how much your balance sheet allows you to expand, and what kind of capital you're going to be able to generate from an ROIC perspective on that. So I think Jubilant probably, I think Westlife today is probably where Jubilant was half a decade back, and to that extent, of course, just because the business models are so different, Sonia, Westlife is never going to do the ROEs and ROCs that Jubilant FoodWorks does in its lifetime, because this is not a delivery model, and the store sizes, like I said, are much smaller. You could have a Jubilant that opens up at 800,000 square feet, but McDonald's will need that 3,000, 4,000 square feet. So I think even a 20%, 22% ROC with even 40 stores of expansion is very doable. You remember, Sonia, a decade back, Jubilant used to operate at 40-45% ROE, ROCs, and the economy went into a downturn. And they collapsed because they kept opening 150 stores every year. And the ROEs and ROCs almost halved and the margins dipped. So I think lessons have been learned from that. The good part is that I don't see McDonald's having done that, and I don't think they have the intent. If they push that 25, 30 store opening to 35, 40, I won't be too perturbed because I think the balance sheet still probably allows it.
Okay, there's one in BKC now, Rahul. There wasn't earlier, but there is one now.
What is that, McDonald's?
Go for it. Rahul, sell side, you could probably started by saying it's a fantastic, well-rounded answer. You could have just said, I like burger, a good burger any day better than a good pizza.
Well, it's a Friday for sure. You could throw in a beer as well.
All right, Rahul, thanks very much. It's always a pleasure. Great to have you with us here. Thank you very much for your time.
Thank you so much.
On CNBC-TV18, as always. The market, I just want to take a quick look and then I'll toss it to Sonia. 150 points. So 17,670 is where we are at. And look at the market breadth, which I think you could look at. About 15 minutes into trade, 8:1 advances to declines. So this is just completely one-sided at this point in time. The point is, in the second half, will the market start to, not just here, but globally start to price in the fact that, there is this important speech and, of course, a press conference as well where Fed Chair Powell is going to be speaking. And will that start to wane, or will go all guns blazing, very, very strong fashion into that? That is something which I think will be interesting to note. By the way, just one space which we didn't mention earlier, which has come back into action, is fertilizers. Look at Chambal, it's up 6%. RCF is up 3%. And we, by the way, have got something lined up on the fertilizer space in a bit. Coromandel is up about 3%. Coromandel did come off a little bit. So fertilizers as a space is doing well at this point in time. Sonia.
By the way, I also want to mention, that today in the auto space, the day belongs to Bajaj Auto. It's a fresh high for Bajaj Auto at 4,100. And now the stock is up almost 27% for the year. That's Bajaj Auto. There's lots happening in the auto space, and we'll take that conversation forward. But this is one stock that I just want to point out, hitting a fresh high today. But CG Power reported very good set of Q1 numbers. The company posted a 60% revenue growth and also saw margins expand to 11.5% from 10% last year. Further, CG Power has also had a 200 crore capex plan, which is in the works. To discuss this, we are joined by Natarajan Srinivasan, the managing director at CG Power. Mr. Srinivasan, good morning and thanks for joining in. I want to start by asking you about the export market, because there's a huge crisis in Europe, especially with the electricity costs, the gas prices hitting the roof. Have you seen any slowdown over there? Because I understand that you had a sizable amount of exports a few years ago. What is the situation at the moment?
So there is definitely a potential, but we are not positioned at this point of time to look at exports in a big way. So this company had a very big transformer plant in a place called Kanjurmarg near Mumbai. Even about 7-8 years back, I think the exports could be used about 1,000 crores in transformer. But when we got in, fine during the last 3-4 years, I think that the factory was sold and then it was cannibalized. So right now we don't have capacity to look at exports, but we are gearing ourselves.
Could you quantify that? I mean, what would export revenues be, say, once this picks up for the full year? What kind of numbers are you looking at, sir?
So the exports, it will take some more time. From the transformer side, it will take some more time. Right now in the motor space, but still, transformer and switchgear we're exporting maybe about 500 crores in a year. Similarly, about 10% of our sales used to be exported for motors. We are trying to maybe slightly up it up this year, maybe about 15% or so. But domestic demand is strong, therefore we can't export at the cost of domestic market.
Okay. Mr. Srinivasan, can you tell us what are the big triggers for the company now in terms of growth? What are you looking at? You have an unexecuted order book, I think, to the tune of almost 2,000 crores in the industrial systems segment. But what could be the growth trajectory for the company?
So industrial segment consists of both railways and motors. Motors, actually, the demand drivers, if you ask me, first is, domestic demand. The industry itself is expected to grow about 7-8% because of the demand in the user industries, the infrastructure, chemical, then paper, cement, every industry is firing. Therefore, the domestic demand itself is likely to go up. When industry grows about 7-8%, we can grow about more in double digits. This is one part. Second is this China plus one factor. We have been receiving inquiries from very many of the MNCs for supply. Discussions are on. Nothing is finalized, therefore I'm not able to say anything more. But this could be a great trigger. If something gets finalized, the orders volumes will be quite large. This is the second. And then the third is actually, which can happen in the next couple of years, the EV segment. We are positioning ourselves to cater to the EV segment by developing motors and controllers for the EV. But there also, we are in discussion with a lot of people, so a lot of development work is going on. So these triggers actually, then last is actually the export. Export definitely is on our radar. Once we increase our capacity, definitely we'll be able to export because we clearly see there are some opportunities. So these four actually could take the motor business continuously for the next several years. There could be a lot of opportunities to grow in double digits. The second leg of business in industrial is railways. Railways actually, we so far we have been only doing products. We manufacture traction motors, signal equipments, and relays and things like that. Railways have announced a massive capex of about 1 lakh crore to be executed over 5 to 7 years. There are different opportunities. One is on the Vande Bharat trains. Second is Vande Bharat trains. 400 trains are initially expected to be. 200 trains tender is already out. Another 200 trains are likely to come. So this itself is a big order. Each train costs about 140 to 150 crores to be is required for making one train. And then on the loco side, railways want to up their capacity from 6,000 to 9,000 HP to 12,000 HP. But both the Vande Bharat trains and the loco enhancement, you have to partner with somebody who already has got a demonstrated track record. So we are talking to a lot of global players. If it gets tied up, then we'll be able to participate in the tenders. This is one. If that is not possible, all these tenders have to be executed with a lot of Indian content.
Got it.
Then otherwise, we could see opportunities to supply them. Some of the components are where it could be of use. Then there is also there are metros which we have never participated. We are exploring whether we could participate in the metro opportunity.
So
the last is actually on the communication side. The railways have come out with a program on the safety side, what is called as TCAS, Train Collision Avoidance System. That the entire 75,000 kilometers they want to implement. Right now, only 2,000 kilometers orders have been released. So this could be an opportunity for again next 7-8 years. Then lastly, wherever railways used to have mechanical interface, now they are converting into electronic interlocking. So these are areas where we have not tied up technology. We are both working indigenously as well as trying to talk to some people. So once it gets tied up, there will be a bigger opportunity. Therefore, both motors as well as railways have multiple opportunities for growth.
Right. I mean, that's a long list of things which you are eyeing where you're not present, but you clearly see yourself participating, right? This is all in the industrial segment. By the way, what is the split between power and industrial segments right now? Revenue split?
So right now, it's about 65-35.
65 power, 35.
Power was actually, power growth was stunted because we took some time to set right. So eventually, power will also grow.
Yeah. No. So my question is to do all that you are kind of eyeing. Would you have you surely have to do capex, right? Invest. Could you give us some idea? What are plans there?
See, on the motor side, definitely we require capex to increase our capacity. We are evaluating. One is, the normal capex we are spending close to about 70-80 crores this year on motors for debottlenecking and balancing, etc. That will release about 10 to 15% of the capacity. So the existing capacity plus whatever is getting released should take care of our requirements for the next couple of years. In between, we are looking at setting up grassroots plant. We are evaluating the sizing, location, etc. So once that is done, definitely some kind of investment, fresh investment for a new project will be required. Investment could be of the order of anything between 400-500 crores to be implemented over a period of 12 to 24 months. This is for motors. Systems.
Okay, yeah.
So railways, actually, this will be a project requirement. Whatever you participate in, whatever you build, ultimately you sell it to the railways. Therefore, it is not some expenditure for meeting some capability requirements. Expenditure will be required. If you align with somebody, and then how it will be spent, one watt share, etc. What kind of arrangement? All those things have to be thought through. I see more that expenditure is not significant, but more of a working capital and some marginal expenditure for creating some infrastructure. That's what I see as far as railways is concerned.
Got it. On the motor side, though, in the next 12 to 24 months, 400 crores to set up a greenfield plant may be required. You're evaluating, right? Just a bit on the power side now. How do you see things there? I mean, in the annual report, you do highlight a fair bit of opportunity there as well, right? Renewable, smarter grid, smart metering, distribution. How are things going to pan out this year and the next?
So actually, if you look at power, to give you a little bit of background, one is, there are three segments. One is generation. Immediately after generation, there is transmission. Then there is distribution. We are not in generation, but we are certainly in transmission and distribution. Our products that we manufacture, that is transformers, switch gears, then circuit breakers, all those are used both in transmission and distribution. there is significant amount of investment that is getting into this industry. Now, if you see some overarching themes, one nation, one grid, power for all, then decarbonization, and in the last summer, actually, unusually, first time we experienced some kind of peak shortage. Therefore, another about 11 to 12,000 megawatt of capacity is getting added. And renewables, we know that how much of solar and other renewables are getting added in the next 3 years. Irrespective of the source of power, post-generation, the requirements are the same. Whether it is whatever be the generation, it is solar, any renewables, etc. Post-generation, transmission and distribution, whatever is really required, that requirements are the same. Therefore, we see a lot of opportunities for both for power transformers and distribution transformers can grow for next several years. The third aspect is, for example, given the digital push, there is a huge requirement of for the data centers that also, pushes the requirement of power as well as some kind of transformer and substations. So all these, so there are several drivers which actually which will contribute for the increase in the power requirement and consequently for transmission and distribution.
Okay, one final question on this, this separate EV, electric vehicle mobility business that you are planning to set up, that you have set up. You're looking to re-enter the three-wheeler and the EV tractor space. Just wanted some timelines on what you're looking at and what could the opportunity be?
Sonia, I think that is probably tube investments. I think
Yes.
the EV mobility, tractor, etc., tube investments, it's our holding company. We are in the, we only want to cater to those users for setting up by developing motors and controllers for to be used by those electric vehicles.
Only be through the parent company, nothing on the CG Power listed entity, right?
CG Power, actually, we do manufacture motors. Therefore, we position ourselves. We want to position ourselves to develop motors for the every EV will have to have a motor and controller.
Sure.
There's two-wheeler,
Yes.
three-wheeler, four-wheeler. The huge amount of demand right now.
So have you got any orders on that front?
So it's all at a discussion stage because orders means first you have to get the specification, develop prototype, then prototype has to be approved. Thereafter, you will get the order. So we are at the preliminary stages now.
All right, Mr. Srinivasan, we'll leave it there. I had a bunch of other questions, but next time. Thank you very much for joining us here on the program. Thank you indeed for taking the time. Well, we've got the market, which has come off. I mean, it's cooled off a little bit. I mean, that frenzied kind of up move that we saw is disappeared. So the high has been made at 17,685, and we're about 50 points off the day's high now as things stand right now. We'll take a quick break here. We'll come back and we'll have an interesting discussion with Mr. K.S. Raju, Chairman at Fertilizer Association of India,